Welcome to This Week in Money. I'm Jim Goddard. Today, Chartwork CEO Ross Clark comments on the TSX 11-day rally, something rarely seen, and also points out the Canadian dollar is struggling despite high oil and lumber prices. Publisher of the Campbell Real Estate Timing Letter, Robert Campbell, talks about the real estate boom still happening in select California markets. It might also be time to buy Hawaiian real estate if you don't mind volcanoes. Speaking to us from Puerto Rico, Lobo Tiggre from the independentspeculator.com tells us what he looks for when investing in a company, how silver might be on the verge of a rapid ascent, and whether cryptocurrencies are here for the long run. Plus, at the end of the show, we'll have a company showcase update from American Manganese CEO Larry Reaugh. We'll talk to Ross Clark right after this.
Cypress Development Corp's flagship lithium project is located just east of Albemarle's Silver Peak mine in the heart of Clayton Valley, Nevada. A 12-hole exploration drill program for lithium-enriched claystone on Cypress's 100% controlled properties is now underway. Cypress Development Corp trades on the TSX Venture Exchange, symbol CYP, the Pink CYDVF, and on Frankfurt's C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Glance Technologies owns and operates Glance Pay, a disruptive mobile payment technology now live in 16 cities in Canada and about to launch in the US. With revenues up 664% in the last quarter, Glance Technologies has the potential to be a worldwide leader in an industry projected to grow to $1.3 trillion in 3 years. Glance Technologies stock symbols are GLNFF in the US and GET in Canada. Find out more at glancepay.com.
Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
My guest is Chartwork's CEO, Ross Clark. Welcome back to the show, Ross.
Nice to be with you, Jim.
Ross, the Toronto Stock Exchange went 11 days in a row with a positive flow, and that's something that you hardly ever see, isn't it?
Yeah, I think you'd have to go back to maybe a year ago, coming out of the trough that we saw in August of last year, but even at that, it wasn't 10 consecutive, and this is pretty good. But you take a look at why it's doing it. You've had a weak Canadian dollar, so we're talking about an item that's priced in Canadian dollars, and you look at the energy market, which is always a big part of the TSX, and the energy sub-index, the XEG, just racing along here to the upside, best level that we've had in well over a year. Sort of matching the move we're seeing on the U.S. side with the XLE, the U.S. ETF for energy, is up and testing the best levels of the last 2 years. Now, it's just at the previous highs, whereas the Canadian is higher, and that's because our currency has been under pressure. So now, the thing you have to be concerned about here in the short term is that we're getting excesses when we take a look at our relative strength indices and other oscillators. The energy markets are now, in terms of the individual stocks, giving us excess readings on the upside, so we're overdue now for a typical correction. If we look at the oil market itself, we've had 9 good months here to the upside coming into the end of May. And historically, once you've had 9, you can be ready for a 50% correction of the last rally. Could stretch maybe into 10 months, but the first week with a lower low as we get to the end of May and through into June probably becomes a corrective point for oil, and we're up in the $71 to $72 bracket right now. The last supporting low was at 58, so look for a 50% correction of that move. If you see that, the probability is the Canadian market's going to take it on the nose here for a few weeks. So for anybody who managed to pick up the lows and trade it up, probably a decent time to lock in a few dollars in the profit there.
The Canadian dollar, shouldn't it be doing better if oil prices and lumber prices are at at high volumes and at high prices?
Oh, definitely. And we looked at this a week ago where the divergence was really showing, where the Canadian had bounced, but to a much, much lower high than we'd been seeing. And then this week, the tail end of the week, with NAFTA negotiations still having trouble moving forward, we saw both the Mexican peso and the Canadian dollar take it on the nose. And when you have divergences like we saw, where the Canadian a week ago on that bounce was a full cent and a half below the highs that we'd seen in April, while oil was pushing into that $71 bracket, when you get that type of divergence, you inevitably, 9 times out of 10, are going to see the Canadian dollar take a pretty good hit. So the dollar was down maybe 0.75 this week. I wouldn't be at all surprised to see that you take out this support area that we've had since last October and tack on another couple of cents on the downside. And from an interest rate perspective, there's really no reason for money to be attracted into Canada because the differential on Canadian rates versus U.S. just isn't there. And if you take a look at our oil price, West Canadian Select is at $56, and you've got U.S. Prices sitting at $71.72. That kind of a discount is just not good for Canada.
Is one of the reasons for the Canadian dollar weakness as well the strength of the U.S. dollar?
Oh, yeah. So the U.S. dollar had that 5 to 6 week consolidation, formed a beautiful base, had a first rally and pullback, and then this week again it came to life. So the drop in Canada was as much this week, I would say, because of the strength in the U.S. dollar, and you can see it if you look at the yen or you look at the euro. You see similar action there in terms of weakness. The Canadian it was primed to do it on its own, regardless of the U.S. dollar. So U.S. dollar wise, I think it's going to try and grind its way higher over time, and that's going to continue to keep pressure on Canada. Disappointingly for the gold market, though, that has meant that as the dollar had that next wave of buying this week, gold did not hold the $1,300 level. We got down into the 1280s. We closed off the week at 1290 and change. It's going to need to get back above the 1310, 1320 range in quick order to try and put this thing back into a positive-looking mode. There is a trend line coming up. It's about a year long from the support level December of a year ago. Good 2 or 3 point trend line that it's just bouncing off of. We'll see how that holds in the next couple of weeks.
How are U.S. small caps doing?
Continuing as we've talked about, this has really been the leading sector. We've had, since the February break, the consolidation phase, which has been really a triangle formation as far as the various indices were concerned, the broader indices. The Dow has been the weakest, keeps testing the lows. S&P's middle of the road. The NASDAQ is doing better, but the small caps, the Russell 2000 and the IWC, which is the actual small cap index, have been doing very, very well. We have got some overbought readings as of this week, so I wouldn't be at all surprised to see a correction in here. But I guess with all the talk regarding protectionism in the U.S., the small caps have turned out to be the favored place for now.
Ross, thank you so much, and have a happy Victoria Day.
Same to you, and Memorial Day coming up next week.
My guest has been Chartworks CEO Ross Clark, his website chartworks.ca. Coming up, the publisher of the Campbell Real Estate Timing Letter, Robert Campbell, next on This Week in Money.
Always consult your investment professional before making any investment decision.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp. Inc., MGI on the TSX Venture Exchange. A 2015 drill program on the LH property intersected high-grade gold, including 16.9 meters of 13.58 grams and 11 meters of 20.66 grams per ton gold. A follow-up drill program is planned to further evaluate previously identified subsurface high-grade gold mineralization. Please visit our website at magnumgoldcorp.com.
MGX Minerals is revolutionizing the new energy economy with patented lithium extraction technology, replacing traditional solar evaporation using low-cost, low-energy nanofiltration. The first system of this paradigm shift technology is currently being commissioned. MGX Minerals trades on the CSE, symbol XMG, the OTCQB, symbol MGXMF, and Frankfurt, symbol 1MG. For more information, visit our website, mgxminerals.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Robert Campbell. He's the author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter. You can find him online at realestatetiming.com. Bob, welcome back to the show.
Thank you very much, Jim.
Bob, how is San Diego right now?
From the standpoint of real estate,
yes,
the market it's hot. And it's accelerating higher. I think that this could be that, according to the California Association of Realtors, the median price home in San Diego went up 9.5% in the last 12 months, and that's the year-over-year gains are increasing, so it's accelerating, Jim.
Is that the only
the idea? Because things were already expensive, you know, and it's so interesting because mortgage rates are going up, right? Mortgage rates are going up. It hasn't stopped anything. So I kind of think that, you know, we have to be long in the cycle. I mean, that's just kind of from experience. You know, the markets can do anything. You know, during the bubble, you know, housing prices in California didn't double. They tripled. You know, when we got to double, and I go, oh, they can't go any higher than this. Oh, yeah, they can. They went up, you know, they went up another 100%. So, but I think that, you know it's coming. You know the turn's coming, and I kind of think that this may be the last hurrah where prices start accelerating higher and higher, and pretty soon it just gets totally unaffordable and, you know, more unaffordable, I should say. And then the sentiment changes, and people go, "I'm not buying into this," and then the downturn starts.
Is San Diego the only place in the U.S. where you would consider the real estate market is bubbly, or is it across California?
Oh no, I don't know. California prices are very high. I wouldn't call California a bubble, as you know, like compared. San Francisco's a bubble. San Jose, Santa Clara is a bubble. Other smaller bubbles I'd consider. I think Denver's a bubble. I think Dallas is a bubble. I think Portland is a bubble. I think Seattle's a bubble. But the biggest bubble of all is San Francisco. The median price home there is $1.7 million right now. It takes $330,000 of household income with no other debt and a 20% down payment to afford that home.
Do you think that they're laundering money there and using real estate to do it?
No, I think it is. I think it's high tech. High tech. You know, those people at Google and Facebook, those guys make a lot of money, Jim. Those high tech guys and those startup guys, those guys are making a lot of money. And that's what's fueling it. That high tech. High tech is if you're good in high tech, I mean, you're making tons of dough. And that's the same thing that's happening up in Seattle. Who's up there? Amazon's up there, you know, and those guys are, of course, Amazon, I don't know what part of Amazon, the execs, I'm sure, make a lot of money. The people in the warehouses sure don't make any money. They're like minimum wage workers. Well,
Amazon is moving big time into Vancouver, anywhere from 2,000 to 5,000 jobs over the next few years.
I know. But I think, you know, Trump doesn't like Bezos, right? And Amazon, you know, that any business can be defeated by government action if for some reason they think it's a monopoly or, it's a loss leader trying to drive everybody else out of business to their benefit. So you don't know about those things. And you're completely familiar with Facebook. I mean, it seems like every week we read about new things where they're comparing being on social media to smoking cigarettes, that it's that addictive and that bad for you. So, I mean, all that stuff can change, Jim. I keep thinking that if the Bay Area got hit, because of social media and all those people that work for those companies, instead of making an average wage of $250,000 a year, if they only made $150,000, housing prices would come way, way down, right? And that's possible. That's possible.
Do erupting volcanoes affect the price of real estate in surrounding areas?
Yeah, if you're next to the volcano. I mean, I happen to know that, for example, I've probably been to the Big Island in Hawaii maybe 15 times, and the closer you get to the volcano, the cheaper the land gets, of course. And I was thinking, I'd love to own a second home in Hawaii. That's my second favorite place, but the cost of living is just like ultra high, highest in the country. High housing prices, high utility costs. But right now, if I was somebody looking to buy something on the island, I bet you now would be a great time to buy island real estate on the Big Island.
Anywhere.
This is just part of it. Don't buy it right next to the volcano. I mean, you can buy lots on the volcano there that are half an acre, or in some cases an acre, just built on old lava flow. You can buy those lots for $40,000. I bet you can buy those things for way less right now on the other side of the mountain.
I saw where only 5% of the island is actually affected by the volcano, so the rest of it probably would still be good to go.
Oh, it would be good to go, but I'm sure that, that's not helping property values on the Big Island, Jim.
It is if you're looking to buy.
Exactly. As a seller, you don't want an active volcano going off, and but that's really something. Oh, I've been there plenty of times and gone down to watch the lava come across the road and flow into the ocean. That's just ordinary stuff on the Big Island. The Big Island's the newest island. That's why the volcanic activity is the strongest.
Well, you could have a backyard where you could just throw the steak on the ground and cook it.
We were up there looking one time up there. We're going up to watch the volcano, and there was this house for sale by owner. I swear it must have been a joke, because the lava flow was coming down the hill. It was about 50 feet away. So but you get what you pay for up there. I mean, if you go over on the Kona side, in the with those Kailua Estates or something like that, Emerald Estates and all that area there, that's on the wet side of the island, on the Hilo side. Those homes cost maybe one third the price what it costs to be on the leeward side of the island, on the Kona side. It gets 120 inches of rain per year over there. That's another bad thing to own. That's where that's where the real estate is most affordable on the whole island, of course.
Somebody
from a lot of rain and volcanic activity.
Well, apart from the volcanoes, the rain wouldn't bother somebody from Vancouver, because that's probably less rain than Vancouver gets.
It gets 120 inches a year. You told me Vancouver gets 15.
That's White Rock in Vancouver. If you're on the North Shore, especially Deep Cove, it rains there on sunny days. I'm not kidding.
That's like Hawaii.
Yeah.
That's like on the wayward side of the island. It can be 80 degrees and then it starts raining.
Yeah. It's like having a shower.
Cool, but I don't like the rain. I'd rather have the sun.
Yeah. Are rising interest rates making potential real estate buyers nervous?
Absolutely. Absolutely. Like 2 months ago, it only took $303,000 to buy the median price home in San Francisco. Now it takes $330,000. But it hasn't slowed them down. It hasn't slowed them down yet. Because, when prices get as high as they are, this isn't an entry-level market working anymore, Jim. This is move-ups. That's who's got the money. The people that can afford to buy the high prices nowadays are people that already own homes. And they're coming in with big down payments.
Do rising interest rates always have a negative impact on the real estate market?
Yes, never a positive. Never a positive, Jim. It's always a drag. It's always a drag on prices. It's just like pure mathematics. It's like gravity. the higher interest rates go, the more downward pressure it pushes, it puts on affordability and therefore prices. I mean, they can buck the trend for a while. But for example, back in the 80s, when mortgage rates in the United States hit 17% in 1980-1981 period, the volume just collapsed. It just collapsed. So the inflation was going off at about 10 or 15% per year back then. Interestingly, the price of houses in San Diego from like 1980 through 1984, they only fell something like 5 or 10% in terms of U.S. dollars. But when you adjust for inflation that was going off at double digits, it was a 30 or 40% downturn. That's kind of interesting too.
With interest rates rising, are banks starting to constrict credit?
No, not yet. And that's a really, really good, smart question to ask, Jim, because the real estate cycle, to a large degree, is not only determined by the real estate cycle. By the credit cycle. And when real estate turns down, that's when the credit cycle starts contracting. But until prices start down, it's very accommodative.
I was just going to mention that some Canadian banks will say their official 5-year closed mortgage now is just over 5%. But if you talk to them in the right way, they'll knock it down to 2.95.
Well, a lot of people are resorting to adjustables now, and that's probably not going to turn out well this time. With interest rates at a 1,000-year low or something, do you think now's the time to purchase with an adjustable rate loan? No. Upward pressure on rates. We've seen the low in rates. Rates are going to go back to normal again, and which is going to be a big problem. But that's part of the coming economic storm. It's going to be rising interest rates, Jim.
We'll have more with Robert Campbell next on This Week in Money.
Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain's Brunswick property is located in the Reaugh Shear Zone in Ontario, with grab samples running as high as 32 grams per ton gold. A follow-up drill program to test numerous targets located by recent groundwork is planned for early 2018. Please visit our website at rmroyalty.com.
Vatic Ventures Corp. is a potash exploration company focused on the Korat Basin in Thailand, the world's largest undeveloped potash resource. Vatic's management has extensive potash exploration and development experience in Thailand. Vatic will have marketing advantage compared to Western producers. Drill program commences this spring. Vatic trades on the TSX Venture, symbol VCV, and on Frankfurt, symbol V8V2. Visit our website, vaticventures.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Robert Campbell. Robert, here's a recent quote from MarketWatch. Americans haven't been this optimistic about house prices since just before the crash. Bob, could it be different this time?
No, it's going to be the whole universe is cyclical. The world is cyclical. The markets are cyclical. The cycles don't repeat exactly. There's slight variation, but it's all cyclical. And it's so interesting. If you just go back, if you live long enough and just track this stuff mentally, and if you've got a good memory and can remember it, like back in 1965, which was the peak of the housing market, I think the 70% of all Americans said that that now was still a good time to buy real estate, and they expected prices to move higher in the next 5 years or so. Now that number's down to 65. It hasn't quite reached that. That's still a big number. So market sentiment's really important, in tracking stuff like that. So now that as more and more people, go over to one side of the boat thinking it's a good time to either buy or sell, when it gets lopsided, that's when the boat tips over. So I think we're probably within a year. Because I think these rates are probably going to, if I had to guess, that's the most obvious catalyst. It's rising rates. But it could be the pension crisis too. It could be a lot of things. You never know. It could be something small that develops and turns into contagion. Chaos theory, the butterfly effect, right? The Toronto housing market, the crash in the Toronto housing market precipitate a crash down here too. People go, I don't want that to happen to me.
Are people from mainland China still buying high-end real estate on the west coast of the U.S.?
They are, but that's really, really hard to get a good number on. I'm sure they are, because money is still pouring into the United States. But to what degree, I really can't comment on that with any degree of certainty, Jim.
President Trump is trying to bring manufacturing and jobs back to America. Is that likely to affect the real estate markets in the U.S.?
Yeah, I think it is. I think what it's going to do is going to increase inflation is what it's going to do. Now the cost of imported goods are going to get higher, along with the cost of goods manufactured in the United States are going to get higher. Inflation is going to go higher. And when inflation goes higher, mortgage rates go higher.
The price of oil is above $70 this week. Is an increasing oil price likely to affect real estate?
Yeah, because oil prices tend to be well correlated with inflation, Jim, because it's such an important ingredient.
How bad is the consumer debt bubble in the U.S.?
It's very bad. It's not as bad as Europe. It's not as bad as China, but it's still very, very bad. The average consumer nowadays, the average American literally living on debt, Jim. Living on debt. He needs to borrow money to buy a car. He needs to borrow money to buy a house. He needs to borrow money to borrow everything. The net worth of the, I think it's almost 60% of all U.S. adults over 18 years old have less than $1,000 in their savings account. What does that tell you? So how are people surviving? Of course, the jobs help them live month to month. To a large degree, it's in debt. It's on debt. And interesting now, the prime auto market is, those auto loans are still doing well. The subprime auto loans, they've been, the delinquencies have been trending higher for the last 3 or 4 years. So they're getting in trouble. They're the weak. Bad economic times preys on the weak. And that's where you're going to see it first. You're going to see the subprime, that'll go bad, then the prime will go bad, then the economy will go bad, but it's the poor people that feel it the first.
What do you see ahead for the U.S. dollar?
I think it's going higher. I think it's going to go higher. And that's part of the problem. It's going higher because the Fed's going to keep raising interest rates, Jim. I saw the probability of 3 more rate hikes next year. It's almost 50%. So I think these guys are hell-bent. Guys are hell-bent on getting rates up there one way or another and just let the chips fall where they may. For one thing, they're facing a real serious problem in the pension. There's a pension crisis. And that's all because low rates. Guys can't make a return. And I think they know sooner or later they're going to get rates up. They're going to get rates up to where they need to be, so savers and the pension funds can make some kind of return where the bailouts have to be as big. But I think they're going to get them back up there. But whatever happens, that's going to affect asset prices like real estate, for example, and stocks, for example. The guys that are at the controls, I bet you they come out of this. They're going to know what's coming first and be able to protect themselves, before the average American.
We'll have more with Robert Campbell right after the break.
Aben Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Aben's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at abenresources.com.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. We're speaking with Robert Campbell, his website, realestatetiming.com. Robert, gold and silver remain in a long-term trading range. What could cause money to rush into gold and silver?
I think the reason that when the next downturn comes in the economy and the stock market starts correcting and the real estate market starts correcting, the only thing that's undervalued is gold and silver. And that's where the money's going to go. It's going to jump into gold and silver. You're going to see inflation go up, interest rates go up, political uncertainty go up, economic uncertainty go up, and the big money that's bailing out of stocks and real estate, it's going to go to commodities in general. I think commodities are going to do well, but I think in particular it's going to go to gold and silver. So it's just going to be, a purely from capital flows. What else is undervalued right now, Jim? Does anything come to mind? Is real estate undervalued? No. Is the stock market undervalued? No. So, to me, gold and silver, its day to shine is on the horizon.
The Dow has had a great run since President Trump was elected. We're hearing the Dow is headed for 40,000 points. Others say it's going to crash. What's your point of view?
I think we've seen the highs. I think we've seen the highs only because of the chart pattern. And it's a very, very clear chart pattern. And if you look at anything that's all of a sudden starting to rise vertically like it has, in the last 2 or 3 years, and then all of a sudden it trades off, falls 10%, and we're still 10% below the old highs from like 6 months ago. That to me is like the first signs of a major market correction.
It looks like President Trump is focusing some of his energy on California. What should President Trump do to make California great again?
Replace the governor? I don't know what he's going to do. To make California, that California is, I just don't understand, the lunatics in California. And I think, people in the United States, public sentiment is going to turn against us too. With these sanctuary cities and this, la land attitude that, we don't want a fence, we're not going to comply with federal law, blah, 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 all this kind of stuff. I don't think this is, and even the people here, at least in the southern half of the state, in Los Angeles and Orange County, we aren't liberal. We're conservative. We're fighting what's going on in the northern half of the state. So, but I think that, the pension crisis in California is one of the worst in the United States. We got that going against us, and we just keep spending money like crazy, on socialist free lunch programs, and we're going to be in deep doo-doo too.
How can people find out more about your newsletter and your book?
They can go to my website. It's realestatetiming.com, just like it sounds, no periods, no dashes, realestatetiming.com, and they can learn it. They can buy my book, and they can or subscribe to my timing letter. And I've been publishing it for 16 years, so I'm no newbie to this, and it's really good. If you're interested in tracking real estate trends and knowing what to look, what signs to look for, even if you're in Canada or anywhere else, because the same indicators work in Canada just like they work in the United States or any other free market, and it can really, really be helpful.
Robert, thanks for being on This Week in Money.
You're welcome, Jim. Thank you very much for having me. Always enjoy it.
My guest has been Robert Campbell, author of Timing the Real Estate Market and the Campbell Real Estate Timing Letter, his website, realestatetiming.com. He was speaking to us from San Diego. Coming up, Lobo Tiggre, next on This Week in Money.
Arctic Star Exploration, operated by a team of proven mine finders, is focused on diamonds in Finland and the Northwest Territories of Canada. A work program is planned for our Finland property that contains diamond-bearing kimberlite. Arctic Star trades on the TSX Venture Exchange, symbol ADD, and the Frankfurt Exchange, symbol 82A1. Please visit our website at arcticstar.ca or call us at 604-689-1799.
I'm Brian Fowler, president of Blind Creek Resources Limited, listed on the TSX Venture Exchange, ticker symbol BCK. Blind Creek is focused in the Yukon, Northwest Territories, and British Columbia. The company's key property is the Blend Project, one of the largest undeveloped lead-zinc-silver deposits in Western Canada, plus plans to advance the recently acquired, fully permitted historic Engineer Gold Mine in the Atlan District of Northwestern BC. Check us out at blindcreekresources.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back to This Week in Money. I'm Jim Goddard. I'm speaking with Lobo Tiggre. You might also recognize his voice. He was Louis James for 14 years back in the old days. You worked for who?
Casey Research.
Casey Research. And Doug Casey continues to be a guest on the show, but now Lobo is on his own, and he's the principal analyst and editor of Independent Speculator. He's speaking to us from Puerto Rico. You can find him online at independentspeculator.com. Welcome back to This Week in Money.
Thanks. Happy to be here.
Can you just tell us about the Independent Speculator and why you set it up?
Yeah, the main reason why is that for the last few years, the policy at my former employment was that I couldn't invest in what I write about. And I really believe that we're in the early days of a phenomenal bull market run, secular bull market for commodities in the resource sector in particular. And we can talk about specifics within that too. But I think a big wave is coming, and I want to ride that. And I don't want to just write about it and watch it. I want to participate. I want to make money. And I was not allowed to do that with my former employers. Plus, all the readers that have commented on this subject to me, and hundreds have over the years, they all hated that I couldn't put my money where my mouth is. Why should I buy what you're writing about it? You won't put your money into it. It's to avoid conflict of interest, supposedly, but they really preferred that I have an interest aligned with theirs and wanted me in the trenches with them. So that's why I set up my new service, to be able to participate, and that's how I set up my new service. I write about the companies that I am personally investing in, putting my money where my mouth is. And yes, they can find out about that at independentspeculator.com.
What sectors do you follow in the Independent Speculator?
Well, I've cut my teeth, as it were, on metals and mining. I'm known for that, and that's obviously the place to start. I have expertise. It would be foolish to walk away from all that. So I am very focused on metals and mining stocks, and that'll be welcome news to people who miss me from my former publications in my prior life. You can know that, yes, rest assured, I am covering those same markets. And if you feel a lack of guidance these days, now you know where to find me, where to get that guidance. But I also don't want to be pigeonholed. I don't want to be seen as just the metals guy, or, certainly not just a gold bug. I have broader interests, and I haven't really had much of an opportunity to exercise them under the KC banner. But now that I'm on my own, I can. In particular, I'm a technophile. I keep up with a lot of things in the tech space, and I'm looking forward to diversifying there. I have to admit, I did not catch the Bitcoin wave last year. I did not ride it from $1,000 to $20,000. I did buy some Ethereum, though. But I do pay attention to these things. And with suitable backup, I'll tell you quite frankly, hire other people that have more expertise than I do to help me in this area and make sure I make good picks. But I do plan to diversify carefully, and where I'm really positive that I'm on to something great.
What do you look for in companies?
Well, one of the first things is skin in the game. It's funny, though. I felt almost like a hypocrite before, because I look for that when I'm looking at a company. One of the first things I do is look at the people involved. Doug Casey's 7, then 8, then 9 Ps of resource stock evaluation. The first P was always people, and I follow that KC model. He, taught me well, and that's the very first thing I do before I look at the rocks or anything else. I look at the people, and one of the things I look at is, are they invested? And are their interests aligned with their shareholders? And if they're there just to draw a salary and spend all the money on G&A, and it doesn't make any difference to them because they don't have any shares, so that's a big red flag. So it's absolutely one of the first things I look for. Also, since I have been doing this now for 14 years, I've seen a lot of rocks, and I've seen which ones became mines, which ones didn't. So I like to do my own boots on the ground due diligence when I'm going to invest. I like to go and proof the story. Anybody could read the website, the PowerPoint presentation, and so on, but the company controls that. I want to go on the ground and see if the friendly natives really are all that friendly, or if they're burning the CEO in effigy when he's not looking. Those sorts of things. So since I am broadening out, looking to diversify, I can't say there's any one thing. I know geologists who say, I'm looking for a certain amount of grade over a certain width, and that shows me that a deposit has real legs. That's just one area. But I can say that I am looking for great people working on great projects where I can independently go myself and verify the key parts of the story. There's that independent thing again. It's really important to making sound decisions.
When choosing companies to follow, do you rely on technicals, fundamentals, or both?
I'm kind of a fundamentalist, I have to admit. I'm not saying I don't look at the charts. I do. But I don't consider myself a technician. And whether there's a flag pennant pattern or a cup handle pattern, these things are interesting. And sometimes they do work out and something does fit the pattern. But I find that, in my experience, it's been very risky to depend on these patterns. And what may be a head and shoulders pattern, well, it could turn out that all of that was just the shoulder of another larger head and shoulders pattern or something like that. So I find it very difficult, and therefore I want to look into the fundamentals. And oddly enough, for somebody who calls himself a speculator, who is a speculator, an independent one, I do consider myself a value investor. And for that, I need the fundamentals. I'm looking for something that's undervalued.
I was going to say, too, skin in the game, to me, it would be much like writing for a flying magazine, but not being allowed to fly airplanes yourself.
Yes, or the classic thing of parachute folders needing to sometimes jump out of the airplanes with the parachutes they fold. If those guys wouldn't be willing to do that, who the heck would want to use their parachutes?
Now, that's a better analogy. Your thoughts on the U.S. dollar?
Well, here's one where I would tend to defer to Doug in the past. He's got this just decades of guru vision that tunes him in. So I'm not going to come up here and say, here's where the dollar's going, and here's my targets, and that sort of thing. But I will say that it's very important to be watching the dollar now, because for almost 2 years, the dollar has absolutely been in the driver's seat for the precious metals market. And there are times when that's not true, where social and political, geopolitical issues can make gold and the dollar move in different directions or the same direction, depending on those extraordinary circumstances. But there are other times, and it's more often, that gold, which is priced in dollars, of course, moves inversely to the dollar. And we've been seeing that for a couple of years. And so it's interesting right now that a lot of bearish signs are out there for the dollar. A lot of people are, a lot of analysts in the broader markets, not just gold bug analysts, but in the broader markets, are calling for a weaker dollar. The strengthening hand of the Fed maybe says something else, but for whatever it's worth, the consensus out there seems to be that there's still plenty of warning signs for a weaker dollar ahead, and that's actually very bullish for precious metals investors.
We'll have more with Lobo Tiggre next on This Week in Money.
I'm Greg Johnston, CEO of Carl Data Solutions, an industrial Internet of Things company that provides big data solutions for monitoring critical infrastructure. Carl Data offers machine learning and predictive analytics features through our cloud-based applications to deliver key asset-saving operational insights from massive amounts of data. Carl Data trades on the CSE symbol CRL and the pink symbol CDTAF. For more details on Carl Data, please visit carlsolutions.com.
I'm Kelly Jennings, CEO of Powerband Solutions. Powerband is a cloud-based provider of auction, inventory, and finance solutions that make buying, selling, and financing vehicles more efficient. Powerband Solutions trades on the TSX Venture Exchange symbol PBX. For more information, please visit us at powerbandsolutions.com.
This Week in Money is archived online at talkdigitalnetwork.com.
Welcome back. We're speaking with Lobo Tiggre. Is the volatility picking up in the gold market?
That's a good question to ask a couple days after gold drops 2% in a day. And it might seem that way, but this is one of the most volatile markets on earth. And the equities, the gold juniors, are absolutely the most volatile equities on earth. So my answer would actually be no. We've seen larger percentage moves before, up and down. That's just the nature of the beast. People may be a little bit alarmed because of this week, but next week could completely undo it, do something different. I think it's important, though, for people to pay attention to volatility because it can be their friend. You consider what your strategy is. You consider which stocks you want to buy. You think about what the right prices are, what constitutes value. We talked about being a value investor before, even though we are speculators. And you wait for the volatility to give you those buying opportunities. There's a stock right now, true story. There's a stock I have bids in just under market right now. Didn't get filled on the day that gold dropped 2%. I was hoping it would. Somebody else got filled at the same price I did, but there weren't enough sellers to fill my bid, so I didn't get to go long. And I'm working with that now. I'm still playing with that order. I want to buy this stock, and the volatility this week has put it quite close to within my grasp. But have to ask me next time we talk whether I got that stock or not. But I'm telling you, true story right now. I was happy to see that vertical drop. When I got up in the morning and I saw gold falling through the floor, I said, yes, this is the day I'm going to put my bids in. That's exactly what I did.
Is silver likely to run higher than gold?
At some point, absolutely. Silver periodically does that. It's known for that. The big breakouts were in 1980 and 2011 are the two most famous silver spikes since the liberation of the gold price from the U.S. gold standard, which no longer exists. That's a whole other long story. But the interesting thing is that in 1980, gold and silver were both going up. So people don't necessarily realize how much more silver rose than gold and how silver outperformed gold in 1980 because both were going up at the same time. In 2011, it was much more visible because silver went nuts on its own in early 2011, whereas gold didn't peak until September of that year. So there's a very visible tracking where the gold-silver ratio went off the usual trend in early 2011. And those are the two big examples. There are half a dozen other examples where silver just suddenly starts tracking separately from gold, higher than gold. And the causes for that are multiple, not always the same. It often seems to relate to a separate silver story, a shortage story that big copper mines that produce a lot of byproduct silver are in trouble, or a big demand story. The solar panels are getting more adoption and there's a lot of silver in there. These sorts of things can come together to make for one of these silver mini bull runs, but there's no sure way to predict one. So when? I'm not going to tell you. Will silver run higher before gold? Absolutely it will, and it rarely does the opposite. There is no trend of silver just completely tanking where gold stayed high. Silver will drop lower than gold sometimes, but it never tanks without gold falling as well. So if you believe in the precious metals, then silver is your win-win option.
At the time of our interview, oil had touched $72 a barrel. Are we likely to see $100 a barrel oil again?
It's possible, but I think not for long. the fracking revolution is the genie out of the bottle. The OPEC guys have managed to curtail production voluntarily, and right now they seem to have gotten it to where the oil glut that plagued the market for years is now gone as we speak today, at least so they say. But that's a voluntary production cut. It's not peak oil. It's not that the oil isn't there anymore. It's that the sellers, the producers, realized that they were hurting themselves by overproducing, so they cut back. And they can absolutely open those floodgates again. And if oil prices move up, of course they'll produce more. They're in the business to make money. So I wouldn't count on that. And again, with the new sources of oil that was not accessible before, I wouldn't count on sustainable high prices. And the world is moving into the new energy mineral, the adoption of the electric cars. That was once a difficult sell. Now consumers want these things. That's another mega trend that I know that we'll talk about, but it relates to the oil question too. So it is possible that we have seen peak oil, but not in terms of supply, but actually in terms of price. As the world moves away from burning oil for fuel, that we'll never really see high oil prices again.
Are the battery metal stocks likely to enjoy strong markets over the long term?
Absolutely, yes. That's one of my main projections. It's something that I'm looking to put a lot of money into in the coming years. That's writing, not just written on the wall, but like chiseled into the wall of hard stone. The world is moving in that direction. It's happening even without subsidies anymore. The governments don't have to make laws and bans and tax incentives to get consumers to move in this direction. But they are doing that as well. So the consumers want this to happen. The governments want this to happen. We can argue about whether or not that's a good thing, but it is what it is right now. So it's a very, very powerful trend. And I believe that's going to provide very handsome returns for savvy speculators for years and decades to come.
They're predicting high gasoline prices across North America this summer. Vancouver's already, I hate to use the word enjoyed, $1.60 plus a liter, over $6 a gallon gasoline right now. I'm surprised that the car dealerships haven't run out of electric cars, frankly, with prices that high. Is that what it's going to take to get people into electric cars?
I don't think so. I think partly that's certainly true. And if somebody's thinking about it, anybody that's on the fence, and suddenly they're draining their wallet at a faster rate to keep their gas guzzler going, of course they'll think about it more. But I don't think that's necessary. Again, it used to be that nobody really wanted this technology. Electric cars were like golf carts. They had no performance. They were boring. They were ugly. You couldn't go very far in them. And Tesla smashed that. And this is not about Tesla. Tesla's just one of many players, but we got to give credit where due. And Tesla just smashed that image of the boring electric car. And the new Tesla Roadster that Musk is working on is not just going to be high performance. It is, as spec'd out right now, going to be the fastest street legal car in the world, and all electric. That sort of thing just, it's a game changer. It is literally a game changer, and that game has changed.
Are industrial metals being ignored by the market because of this interest in the battery metals?
I don't think so at all. I mean, look at what a fantastic year zinc had last year. You know, zinc, how boring can you get? Zinc for galvanizing steel? Not even a battery metal. So, no, I don't think that our markets are ignoring those metals. The markets are complicated things, and there are a lot of different players with different interests and goals and things. But no, the markets are responding to the fundamentals. And by the way, I think copper, which can be seen as an energy metal, but also is, broadly speaking, an industrial metal, is poised for gains. And I'm particularly bullish on nickel, which is, again, a battery metal, but also very much a broadly speaking industrial mineral.
What are the most undervalued metals and minerals in the commodity markets?
I think, given where the puck is going, to quote that great Canadian philosopher Wayne Gretzky, they all are. But I would single out nickel again. Nickel has risen lately, but nowhere near as much as many of the other energy minerals, and it's absolutely essential. It's also part of the broader industrial picture, as we were just saying, and the global economy does seem to be recovering. So I think nickel is very interesting. And I also think that uranium, one of the great unsung heroes of the day, kind of like we were talking about with oil, I do think that fission power, splitting uranium atoms for energy, is likely to go away in time. But that will take decades to happen. And large parts of the world absolutely depend on nuclear energy right now, as it is right now. And the cost of mining a pound of uranium is something on the order of 3 times the current market price selling it. So this clearly cannot last. It is deeply undervalued. It may not have a decades-long future, but in the near to midterm, I think higher uranium prices are baked in the cake with very, very significant increases and stratospherically possible increases for the uranium juniors.
It looks like interest rates are going to continue to rise. How are higher interest rates likely to affect the resource sector?
Well, there's famous jokes about asking economists about interest rates, so I probably don't want to get too much into that, but I will say that as a broadly speaking economic factor, interest rates ultimately get passed through to customers. So I don't see interest rates directly as a commodity thing, but more like an economy thing. And if higher interest rates put the brake on the economy, that's obviously not so positive for the industrial minerals and so on. On the other hand, if interest rates are responding to higher inflation, the people in the central banks like to tell you they control all these things, but they really don't. They move in response, and they try to influence the market, but they respond to the market, and they have to move and set rates where they do in response to what the market does. So the sort of other than just straightforward higher interest rates at a higher cost and therefore a break on the economy issue is just what do these interest rates mean? What are the central bankers responding to? What's going on in the real world? And what does that tell us? And higher interest rates, while seen as being bad for precious metals, because gold doesn't pay interest, right? That old saw. They can also be a sign of increasing trouble, increasing concern. There are a lot of concerns about the Fed tightening too fast, with the economy really still on life support, despite the rosy numbers. So actually, higher interest rates could be a precursor to higher precious metals prices because they could be a trouble sign, a warning sign.
Lobo, 10 years from now, are cryptocurrencies and blockchain likely to still be around?
Yes and yes, but with a lot of qualification. And I think the first thing to clarify is that blockchain is not the underlying technology. A lot of people think of that cryptocurrencies are based on blockchain, and therefore blockchain is the underlying revolution. But actually, blockchain is just one implementation of this concept, which is the real revolution of distributed ledgers, where not one central person controls this ledger. It's distributed across a network of computers, can't be shut down, can't be falsified because it's across this whole network and so on. That, I think, will change a lot of industries and will do many things. Blockchain is one use of that technology, one use of that idea, and it's deliberately slow and clunky to make it difficult to mine Bitcoin and the like. Therefore, blockchain is not even the best implementation of the technology for other solutions. If you're interested in smart contracts and distributed systems of trust for, say, market analysts and that sort of business, you don't necessarily want to build it around blockchain, and you don't have to. But blockchain does what it does well. I do think it will be around. The cryptocurrencies, it's an interesting evolution I think they have for them. I think they're likely to become more like very quick media of exchange because of the international aspect to them. Kind of like think of Western Union in the digital age, because if you think of them as just currency, that is like money, just money. It's very difficult to have something that functions as money when the prices are so volatile. Like people can't reliably price their services in Bitcoin, because one day if your service is 1 Bitcoin, then that's $8,000, and the next day that's $10,000, and the day after that it might be $6,000. Customers don't want to buy or pay in something that's so variable, and sellers don't want to have the value they're receiving be so variable. And another promise of the cryptos initially, the idea was, this is government proof. It's distributed and the governments can't inflate it and they won't know what you're doing because it's encrypted and private. And that's all turning out to be a little naive and overly optimistic. The crypto people themselves are embracing regulation. They seem to see that it's better for them. If they want to have a big business, then they need to come into the light, be regulated, and establish trust with users. And the ultimate failure of that idea from the beginning was, okay, even if it was encrypted and even if you could move cash around without the government's knowing, At some point, you need to get it out of the crypto system and into the real world, and that's where you're vulnerable. The weak link in the chain there may not be the cryptocurrencies themselves, but the human being and what they do with their wealth. And I would remind your listeners that Al Capone, the great famous gangster of the 20th century, they never caught him on any of the criminal activities he was accused of. At the end of the day, he was so good, he was at being a criminal and covering his tracks, that they never prove any of that on him. But they got him for income tax evasion. They did a lifestyle audit. He drove by his house. Mr. Capone, your house is market value of $10 million, but you only reported $50,000 in income last year. I'm making those numbers up. But that's how they caught him. And I think that's the weakness, the Achilles heel, if you were, for the people who think of cryptocurrencies as a government-proof way to do business and be outside the mainstream market. Very, very dangerous thinking. I understand that thinking. I'm just saying it's really dangerous, and don't assume the cryptocurrencies will protect you. So if the cryptocurrencies don't protect you from government, and they don't necessarily protect you from inflation, if new cryptocurrencies can crop up and crowd the space, then a lot of the utility that excited people about them in the first place, I think, goes away. But that still leaves them as efficient systems for transferring money quickly from place to place. So I don't know that they're quite the revolution of saving the world from the evil governments interfering with money that a lot of idealists believe they would be from the beginning. But that doesn't mean that they don't have useful applications and won't do important things in the marketplace going forward.
North Korea is believed to be mineral rich if everything goes well between North and South Korea. How soon could mining companies be exploring in North Korea?
I wouldn't want to put a time frame on that, and I would want to put a caution on that. I remember a couple years ago, there was this ridiculous headline making its way across all the mainstream media outlets about trillions of dollars worth of minerals in Afghanistan. And I mean, it was, as anybody who's been in the resource sector knows, it's just a silly thing to say, because you can't value some mineral deposit in the ground without a great deal of study, without drilling it, defining it, looking at its grade and characteristics, recoverability, mining or processing costs, all these things that go into establishing the value of some mineral resource. And even then, we call them proven and probable, but really it's more like probable and highly probable, right? All this stuff goes into valuing minerals to say, oh, well, Afghanistan's this big and we've seen these things on the surface, so there might be $1 trillion worth of goods there. I mean, it's just very silly and frankly irresponsible. And a lot of people were asking that same question, ooh, when's Afghanistan? That's the contrarian move. Let's rush into Afghanistan. Well, okay, but contrarian doesn't mean you do the opposite of what everybody else is doing just to be opposite. It means you're willing, based on sound principles and fundamentals, to do something, even if it's the opposite of what other people are doing. And going into Afghanistan 10 years ago would have been a phenomenally stupid idea. Going into North Korea today, I sure wouldn't do it until I saw real market reforms that were becoming institutions that you could rely on. There's so much that needs to change there besides the current Kim stepping aside before that becomes a good place to do business. Just extremely high. Now, could somebody go in early and make a phenomenal fortune by being there first? Possibly. But like Doug Casey always told me, the pioneers take the most arrows. And I would much rather see a wave of more foolhardy souls than me go in there, take those arrows and figure out where the landmines are, and then invest when I see a safe and sound strategy where I can find value that's well in excess of current price. Because there will be a North Korea discount for a long time. And at some point, there will be value that can be studied, measured, and understood in a rational way, and it will be discounted because of the name.
Well, I know when it comes to politics and how that can affect your investments, take a look at Barrick Gold and their Pascua Lama mine on the Argentinian-Chilean border and how that blew up in their faces.
Yeah, it's an excellent example. So, of course, if you ask people in Argentina, it's the Lama Pascua mine.
Well, it depends on which side of the border you're on, doesn't it?
That's right. Well, it's also interesting that most of the trouble is on the Chilean side, and Chile was seen as the more pro-mining, the safer jurisdiction, whereas Argentina was the basket case with all these populist presidents for so long. And now the tables have kind of turned, where Argentina is the up-and-coming country with a pro-business president, seems to be quite willing to see mines developed. And that's particularly interesting in this case because the the Llama side, on the Argentina side of the border, is actually where most of the resource is.
Well, we expect stuff like that to happen perhaps in South American states, so-called banana republics. What about the example here in Canada where you have a battle between two provinces about putting in a pipeline that was agreed to by the previous provincial government in British Columbia? Is that an example, too, of how that can really upset investors?
Absolutely. There's no question that that sort of thing is upsetting, and it really boils down to the reason why the other name of my company, besides independent, I'm independent, but I'm a speculator, and I never kid myself into thinking that I'm an investor. It just doesn't fit the definition. If you read the guru, Benjamin Graham, and how he defined investment, that's not what I do. I am a speculator, and it'd be crazy to kid myself otherwise. And the best, even the biggest, most stable businesses in the sector can still drop, enormously just because of resource prices. I mean, tech dropped like 95% in the crash of 2008. It's just that sort of thing doesn't happen to blue chips, not without them going bankrupt. But in the resource sector, that kind of volatility is normal. So you must understand that you are speculating, even if you stay away from the juniors. And you must understand that political risk is not just possible, but guaranteed to rear its head sometime almost anywhere. There is no perfectly safe place to mine anywhere in the world. Nothing is sacred. Nothing is safe. It can happen in BC. It can happen in Quebec. Do you remember a couple years back when Quebec used to be the top of the Fraser rating, and then they said, maybe we could do something here to have a little bit more tax revenue, and boom, suddenly Quebec dropped out of the top spots in the Fraser rating. There is no place that's perfectly safe. You can mitigate risk. You can certainly diversify your portfolio to deal with that risk, but you must understand that you're speculating, and that's okay.
Are mining unfriendly states like California likely to continue to shun the mining industry?
I think it's likely. Never say never. They could turn around. And in fact, it is possible to mine in California. Atna Resources had a mine startup in California in their previous go, and there is private land. There's actually quite a bit of private patented ground in California that ironically could be easier to permit activity on because you don't have to go through the federal bureaucracy. And remember that the great California gold rush was what populated that state. So it got its beginnings in mining. And maybe most Californians today think of mining as, just one step up from being a Satanist or something in popularity, or maybe one step below, I'm not really sure. But the state was built in large part on mining, and therefore there's legacy mining. And like I'm saying, there's patented ground. So it's not as simple as yes or no, but clearly the cultural milieu there is not pro-mining, and it's going to be a tough fight for most people thinking about that. On the other hand, you run out of money, and suddenly all kinds of things that were off the table before become possible. And California is a state that certainly loves to spend a lot of money, and I could see them getting to a point where they try to find some new business to encourage so that they can increase their revenue because they'll have little choice.
How is the recovery from the hurricane going?
Physically, the recovery is doing quite well. At least in the major areas where the tourists are going to see the mountains of destroyed beds and cars and things from the hurricane, all that's been cleaned up. The power is back in most of the island, almost all the island. It's somewhat reliable. And most of the places where a tourist would go have backup generators anyway. So it's certainly open for business. And if anybody's thinking about the trials and tribulations of Puerto Rico, if they want to help, the number one thing they can do is to come spend a holiday here. That's exactly what the place needs. The physical damage is largely cleaned up, but the economic damage is lingering. There are a lot of empty stores and restaurants, not broken down, but just closed for lack of business. So folks who care and want to help, it's a beautiful island. I'm looking at palm trees blowing in the wind over the Caribbean blue waves right now. I'd invite you to come and join.
How can people find out more about the Independent Speculator?
The Independent Speculator is at independentspeculator.com. It's absolutely the place to start. And since we are in our new startup phase, I can also say that if people have questions and they want to write, I will personally answer them. I invite your listeners to write to me at just the letter L, at LouisJamesLLC.com. That's LouisJamesLLC.com. That's the parent company that owns IndependentSpeculator.com. So I'd be happy to answer questions first.
Lobo, thank you so much for being on the show.
Thank you for having me, Jim.
My guest has been Lobo Tiggre, the principal analyst and editor of the IndependentSpeculator.com. He was speaking to us from beautiful Puerto Rico. And that wraps up our show for this week. We'd like to thank our guests, Ross Clark, Robert Campbell, and Lobo Tiggre, and thank you for listening. If you have any questions for the show, you can send them to info@howstreet.com. I'm Jim Goddard. We'll be back next week with more This Week in Money. Now stand by for a company showcase update from American Manganese CEO and President Larry Reaugh.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at TalkDigitalNetwork.com. This Week in Money is a production of How Street Media Incorporated. Executive producer is Tom Allen. Welcome to Company Showcase, an advertising feature on HowStreet.com.
I'm Jim Goddard. I'm speaking with Larry Reaugh, President and CEO of American Manganese. Welcome back to the show, Larry.
Well, Jim, it's always a pleasure to be with you.
You're at the International Mining Investment Conference in Vancouver. What were people talking about there, and what was your deal there?
The conference was a lot smaller than the one they had in January. I'd say they were lucky if they had 30% of the booths and the people there. And which tells you that the market is in a sideways motion. But what I found was that the quality of the people was rather than having that huge quantity, the quality was much better. You had some better sophisticated people walking around. I think they were looking for investments. I talked to a lot of people that had booths there, and I had a lot of one-on-one meetings in what they call the meeting room, and I was pretty impressed with at least 3 of those meetings, with brokerages and institutions. So, it was as far as I was concerned, it was well worth our time and money. We did a talk on our recycling, and we had, maybe 40, 50 people in the room, which was considerable, considering the amount of people that went to the show. And I had Cametco there for any tough questions that might be asked, because I felt that, that the biggest cynics would be, the local people, right? And so Cametco answered a few questions. We didn't get the ones that I really wanted to get, but I think the talk went over well. Cametco's presence went over very well, and I think we got our message across. But the overall aspect is that I had got the feeling that the market was going to be turning positive. And I know a lot of the companies that were there, they're having trouble raising money. They're having trouble, as we are, with the stocks drifting, especially, slowly downwards. And I think that's coming to an end. I think we're going to start to see an updraft in the market. That's my take on it. And so I was happy to go, because sometimes you have to get out there and mingle with the people that make this market and get some feedback from them and how they feel about things and where it's going to go. Some people were still negative, but I honestly believe that May we're going to have a good summer. And so that's what's particularly going to happen. But in the meantime, there's all kinds of news coming out on the recycling aspect of it, and I thought I'd just touch briefly on that. For example, Reuters have came out and said by the end of this year, 170,000 tons of LIBs would reach the end of life. Now, that's a lot. And just before them, Science Direct said that there'd be 250,000 by 2020 that must be disposed or recycled. So it's and they're talking about a framework that is semi-automatic automated for ensuring faster disassembly of battery packs. We're moving ahead in that direction, and hopefully we'll have some news on that in the next 2 or 3 weeks. So that fits into our pistol quite well. And another company is talking about, and that company is the International Council on Clean Transportation. And they are talking about 13 million plug-in electric cars by 2025 each year after that. So that's a tremendous increase in electric cars. And, everything that I'm reading tells me that, hey, we're in the right space. We're going to be recognized sooner than later, and that everything's going to go very positive for the company. So it's a long weekend up here. It's pretty evident in the market that a lot of the brokerage community took a long weekend, and investors have taken a long weekend because we traded a dismal amount of shares today. Didn't move anywhere. We traded well yesterday. But so the Monday's a holiday, and I'm looking forward to it. It's nice to get a break once in a while. And the venture market won't be open, so you finally get to relax for an extra day on the weekend. And I just wish everybody a great long weekend. The weather looks like it's going to hold up, and so I'm not planning to travel anywhere. I'm going to put my feet up.
Larry, for new-time listeners, can you maybe explain what American Manganese does and why you're so excited about the recycling market?
American Manganese has a process. Well, it's a critical metals company that has a process for processing very low grades of manganese at comparative cost to China. We've patented that process in China, South Africa, and the United States. Now, we've also done a complete pre-feasibility study on the low-grade material in the Tillery Peak, Arizona, and unfortunately, as the pre-feasibility was moving through the chute, the price was moving down, and it was about half of what it started at when we started working on the preliminary evaluation. So we had to put that project on the shelf. And the price is still down there, although, there's a lot of talk about manganese, and certainly we're getting a lot of interest again from the U.S. on manganese. But the reality is that the price has got to go up before you can commercially start up a new plant. If you're an existing plant, you're all right. But if you're starting up a new plant, the economics aren't there. But what we focus on right now is we've taken that technology and we've adapted it, and we've applied for patents on recycling of LIB batteries. Now, that technology we developed for manganese, and with some sophistication, also gets back 100% of the cathode materials: lithium, cobalt, nickel, manganese, and aluminum. So that's our focus right now, and we trade on the venture exchange under the symbol AMY. We trade on the OTC US under the symbol AMYZF, and we trade on the Frankfurt exchange under the symbol 2AM. We have a website out there with everything on it, and it's AmericanManganeseInc.com, and you can reach me at that's 778-574-4444, or you can email me at LREAUGH@AMYMN.com.
Larry, have a great long weekend.
You too.
I've been speaking with Larry Reaugh, President and CEO of American Manganese. I'm Jim Goddard. We were speaking on May 18th.
Comments made on Company Showcase are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at HowStreet.com. Company Showcase is a production of How Street Media Incorporated.